Here's a burning question on the minds of many real estate enthusiasts in 2023. Is buy-to-let investing still viable? The landscape of property investment is ever evolving and there's always something new to learn. Today I'll be dissecting the current market conditions, sharing expert insights and exploring whether a tried and tested true strategy of buy-to-let is still a lucrative path or is it time to adapt to new trends. Here's how to know whether buy-to-let investing is still viable in 2023. Number one, listen to the news. Buy-to-let investing, like any other form of investment, is significantly impacted by economic and market conditions. In 2023, several factors make it imperative for potential investors to stay informed about the latest news and trends. For starters, interest rates play a pivotal role in buy-to-let investments. News regarding changes in central bank interest rates can directly influence the cost of borrowing for property investments. If interest rates rise, it becomes more expensive to finance your investment through a mortgage, potentially reducing your profitability. Conversely, fewer interest rates can make buy-to-let investing more attractive by lowering borrowing costs. Next up, housing market dynamics. These are constantly shifting and staying attuned to the news can help you spot opportunities or avoid pitfalls. Regional differences in property markets can arise due to factors like job growth, infrastructure development, or changes in population. When you monitor news about these local factors, it can guide your investment decisions. Moreover, government policies such as tax changes or regulations on property rentals can significantly impact your returns. By listening to the news, you can anticipate such policy shifts and adjust your strategy accordingly. You must also understand that the market trends can have a significant impact on the viability of buy-to-let investments. For instance, during times of economic uncertainty or recession, rental demand may rise as people choose to rent rather than buy homes. On the other hand, in booming economic times, more people might opt for home ownership, potentially affecting your occupancy rates. Following economic news can help you gauge the overall anticipation of the market. Lastly, being aware of broader economic conditions is essential. Factors like inflation, unemployment rates, and consumer sentiment can affect rental income and property values. For example, high inflation might erode the real value of your rental income, while a thriving job market can attract more tenants. So basically, listening to the news is not just a valuable tip, it's a necessity for anyone considering buy-to-let investing in 2023. You must always stay ahead of everyone if you want to make good money. The dynamic nature of real estate market, coupled with economic fluctuations and policy changes, constantly shows us the importance of staying informed. By keeping your finger on the pulse in the latest news, you can adapt your investment strategy to maximize your potential returns and minimize your risks. Number two, government insights. Most of us don't care so much for the government, but here's a reason why you should care about the data they publish. Government insights such as national statistics are a goldmine for savvy buy-to-let investors. Since the landscape of real estate is constantly evolving, these insights are your compass to navigate the market successfully. Firstly, national statistics provide a comprehensive overview of the economic health of the country. Metrics such as GDP growth, inflation rates, and employment figures can give you a bird's-eye view of the economic conditions that can impact the housing market. In 2023, this is especially critical, as economic conditions are in constant flux due to the global events, technological advancements, and policy changes. A stable and growing economy typically indicates a strong housing market, a factor which makes buy-to-let investments more attractive. Also, government insights can offer invaluable information about population trends. Demographic data such as birth rates, migration patterns, and age distributions can help you identify target markets for your rental properties. For example, if there's an influx of young professionals into a city, it might be a smart move to start investing in properties near job hubs to cater for this demographic. Government reports also shed light on housing market specifics. Did you even know that you can access data on property prices, rental yields, and vacancy rates in various regions? This information is crucial for making data-driven decisions about your investments. For instance, if national statistics reveal that a particular city has a constantly high rental yield, it may be a hotspot for your buy-to-let investing. In fact, government policies and regulations can significantly impact the viability of buy-to-let investments. Staying informed about changes in tax laws, zoning regulations, or landlord-tenant regulations is essential. If there are tax incentives for property investors or lax zoning laws in certain areas, it could be a green light for your investments. Here's where it gets even better. government insights can provide forecasts and future outlooks. So basically, the government data can help people like you and me predict their future. When a government report predicts substantial infrastructure development in a region, it could indicate potential growth and property demand in that area. Finally, government insights should be a cornerstone of your buy-to-let investment strategy in 2023. These data-driven insights offer a clear picture of the economic, demographic and regulatory landscape, empowering you to make informed decisions that can lead to a successful and viable investment. Number 3, house sales. You are probably wondering at this point, why does house sales matter when you're considering a rental property? Well, there are important pieces of the puzzle. House sale data can give you valuable insights into the local real estate market's health and the dynamics. By keeping an eye on recent house sales in the area where you're considering investment, you can gauge the demand for the properties. If houses are selling like hotcakes, it's a positive sign. It suggests a robust real estate market, which usually means more potential tenants for your buy-to-let properties. On the flip side, however, if houses are always staying several years on the market before anyone buys or rents them, it could be a sign of oversupply or reduced demand, and this is not good news for you. More importantly, studying house sales can help you identify potential areas for investment. If you notice a neighbourhood where property prices are steadily increasing, it could be a perfect hotspot for buy-to-let opportunities. Rising property values often convert into higher rental income and potential capital appreciation, which is music to the ears of any investor. I must also make you see that house sales data can help you understand the competitive landscape. When you begin to analyse the types of properties that are selling well, you can tailor your investment strategy to meet the market demand. For example, if small apartments are selling quickly, isn't that the right time to focus on similar properties for your buy-to-let portfolio? It's also very, very important to consider that affordability factor. When you discover that house prices are skyrocketing in a particular area, it may become unaffordable for potential home buyers, driving up the demand for rental properties. This can work in your favour as a buy-to-let investor, potentially leading to higher rental rates and occupancy levels. In addition to this, house sales can show you the trends in buyer preferences. Check this out. If you notice a surge in sales of energy-efficient homes, it could signal a growing emphasis on sustainability and energy savings. Adapting your properties to align with such trends can make them even more appealing to prospective tenants. So basically, house sales are like the heartbeat of the real estate market, and paying attention to them is crucial when evaluating the viability of any buy-to-let investment in 2023. They provide valuable insights into the market demand and potential investment areas and the competitive dynamics. Now that I've shown you that buy-to-let is still viable, why should you invest? Okay, let's talk about something really important. Why are you even investing in buy-to-let properties in 2023 in the first place? It's a question that might seem to have obvious answers, but trust me, thinking about what you want to invest in can change a whole lot in your investment journey. Your investment goals do matter, and you must think about them clearly. Perhaps you are looking for a steady stream of rental income to supplement your current income or perhaps replace it. Or you're in it for the long haul. You're aiming for capital appreciation over time. Whatever your reasons are, your financial objectives shape your approach to buy-to-let investing. Next, consider your risk tolerance. Real estate, like any investment, carries a certain amount of risk. Property values can fluctuate and economic conditions can change. If you're risk averse and seeking stable, consistent returns, buy-to-let might align with your goals, as rental income tends to be relatively predictable. However, if you're willing to take on a few more risks in pursuit of higher potential returns, other investment avenues might be more suitable, like Airbnb investing. Your investment horizon is another crucial factor. Are you planning to hold on to your properties for the long term, potentially decades, or do you have a short investment horizon in mind? The answer can influence your property selection and overall strategy. Long-term investors may prioritize factors like property location and potential for appreciation, while short-term investors might focus more on the immediate rental income. Also, your involvement level matters. Are you ready to be a hands-on landlord dealing with tenant issues and property maintenance, or do you prefer a more passive approach, such as investing in real estate investment trusts or hiring property management services? Your level of involvement can impact your lifestyle and the time committed. Most importantly, you must consider how buy-to-let fits into your broader financial portfolio. Diversification is a fundamental principle in investing. Think about how real estate fits alongside your other investments, such as stocks, bonds, or savings accounts. Diversifying your investments can help spread the risks and increase the potential of your overall financial stability. So your financial goals, risk tolerance, investment horizon, level of involvement, and overall portfolio strategy should guide your decision. It's not just about whether buy-to-let's viable in the market, it's about whether it's viable for you and your unique financial aspirations. So take some time to reflect on your goals and priorities before diving into the world of buy-to-let investing this year. So as we continue the discussion on whether buy-to-let is viable in 2023, here's the bottom line. It can be a promising venture if you're armed with the knowledge and a clear strategy. The real estate market is dynamic, and while it presents opportunity, it also comes with a ton of risk. Listening to the news, staying informed about government insights, keeping an eye on the housing stats, and aligning your investment goals are all crucial steps. But you must remember what's most important is what's right for you and what fits to your personal strategy. But you must remember what's most important is how buy-to-let investing fits into your personal financial journey. Your goals, your tolerance and involvement levels are all unique to you and they should guide your decisions. In 2023, buy-to-let can still be a viable and profitable investment option, but it requires careful consideration and adaptability. Whether you're looking for steady rental income, long-term appreciation, or diversification, make sure that your strategy aligns with your objectives. With the right approach, buy-to-let can continue to be a valuable addition to your investment portfolio. Thanks for watching and see you on my next video.